Question. The rules of debit and credit for a balance sheet says that dash. Options. A decrease in asset and liability account is recorded as a credit transaction. An increase in asset and owner's equity account is recorded as a debit transaction. A decrease in liability and owner's equity accounts is recorded as a credit transaction. An increase in asset, liability and owner's equity account is recorded as a debit transaction. A decrease in liability and owner's equity account is recorded as a credit transaction. Company B had rupees 30,000 account receivable from Company D. On 26 February, Company D made a partial payment of rupees 21,000 to Company B. The journal entry made by Company B to record this transaction is options. A credit to accounts receivable account of rupees 21,000. A credit to the cash account of rupees 21,000. A debit to the account receivable account of rupees 21,000. A debit to the cash account of rupees 21,000. A debit to the account receivable account of rupees 21,000. In the accounting cycle dash. Options. Journal entries get posted to the appropriate ledger accounts. Transactions are posted before they are journalized. A trial balance is prepared after journal entries get posted. Both A and C are correct. Both A and C are correct. Dividends dash are a business expense are recorded by debiting the dividend account. Decrease owner's equity. Both B and C are correct. Both B and C are correct. Which of the financial statements gets prepared first? Statement of cash flows, statement of retained earnings, balance sheet, income statement. Income statement. Which of the following accounts is never reported in the income statement as an expense? Dividend expense, interest expense, income tax expense, depreciation expense. Dividend expense. Which of the following accounts will never appear in the trial balance? Income tax expense, dividends. Both A and B are incorrect. Both A and B are correct. Both A and B are correct. The long-term assets that have no physical existence but are rights that have value are known as investments, intangible assets, fixed assets, none of the above. Intangible assets. The assets that can be converted into cash within a year are known as investments, intangible assets, current assets, none of the above. Current assets. The debts which are repaid within a year are known as contingent liabilities, fixed liabilities, current liabilities, none of the above. Current liabilities. Dash is the first phase of the accounting cycle, making decision about the business, posting entries to ledger accounts, preparing journal, identifying an economic event or transaction. Identifying an economic event or transaction. The sales income, both credit and cash, during a given period is called purchase returns, turnover, sales returns, none of the above. Turnover. The account that records expenses, gains and losses is called nominal account, personal account, real account, none of the above. Nominal account. The process of entering all transactions from the journal to the ledger is called accounting, posting, entry, none of the above. Posting. The dash is a statement that shows the financial status of a company at any given time. Options: balance sheet, trading account, profit and loss statement, trial balance. Balance sheet. The ratio that refers to a firm's ability to meet its short-term obligations out of its short-term resources is called profitability ratio, activity ratio, leverage ratio, liquidity ratio. Liquidity ratio. Which of the following is a current liability of the firm? Bank overdraft, bills payable, outstanding expenses, all of the above. All of the above. Current ratio equal to dash. Current assets divided by current liabilities. Fixed asset divided by current liabilities. Debt by current assets. Debt by equity. Current assets divided by current liabilities. A higher inventory ratio indicates dash. Quick inventory turnover, better inventory management. Both A and B are incorrect. Both A and B are correct. Both A and B are correct. Bookkeeping mainly consists of dash part of the accounting process. Options: auditing the books of accounts, recording financial information, preparing financial statements, analyzing. Recording financial information. What is bookkeeping? Processing, recording, analyzing, interpreting. Recording. Which one is current assets? Land, furniture, cash, investment. Cash. Bank account is personal, real, nominal, none of these above. Personal. Accounting rules contain 3, 4, 5, 2. 3. Generalize this transaction. Purchase return from RAM. Purchase return to RAM. RAM to purchase return. Purchase to RAM. Both A and B. Purchase return to RAM.